All right, folks, welcome to Gatose FX. This is another episode. Welcome back to the channel. We are going to backtest how we took the trade, and basically today we are going to look at USDJPY. It was a trade which I've just closed a very few minutes past. Where I took almost three entries, whereby the first entries ended up with 203 pips, and the second one with 128 pips. But the first entry I took, which I think it was twice times, because the price retraced back to the same original entry, where you can see here in my Instagram page where we have had the first entry here in the 4-hour time frame, and then when the price retraced back, I added another positions, and today I found another opportunity in 1-hour time frame where I added another opportunity. So we are going to back test and see how I was able to get this entry. So let's get back to the chart. Here the chart, this is my origin entry, where you see I've already closed the price. However, the price is still going on bearish, so I am very satisfied, because based on my confluences, this is where I was intending to close. As you can see, the first entry was closed here with 203 pips, and the second rate was closed with 128 pips. So as a matter of backtesting, let's go and see how did I manage to take this trade. This was the USDJPY. Let us change the blocker so that I can leave my original chart as it is. So this is USDJPY. Okay, we are going to see how I was able to get this trade. So first of all, whenever you get into a chart, the number one thing you need to do is to clean the chart. Clean your chart, make it clean. Remove all the past drawings so that you can have a a clear chart and make an independent decision. As we have seen, this is a weekly time frame. So I don't have to go all the way back to see what happened in the past. I will basically focus on what is happening in the present, because what has happened in the present is what has given me this opportunity to get this trade. You remember this trade, I took the sell trade in the last week, and they closed with 240 pips, if I'm not mistaken, last Friday, last week, the first week of January 2023. And of course, yesterday I was able to spot another opportunity. I took the trade, the sell trade, the continuation trade, and today also 1 hour gave me the opportunity. I took also a sell trade. So we are going to see how I was able to manage and spot those two opportunity. So when we look at the higher time frame, this is a weekly time frame, we see that the market structure previously was bearish, because the market was making high highs and high lows, and then high highs. Afterward, we had a lower low. The market made a lower low here. Around this area is where we experience the change of character, or the shift of the momentum from being bullish to being bearish. So once we noticed that the market closed below this previous structure, because this was the last bullish structure. So if price came along this way, we expected to get a push up so that we can continue being bullish. But the moment the price closed below or under the lows of this last bullish structure, this is where we had a confirmation that weekly time frame is no longer bullish, and now we are getting into bearish structure. So we light our confluence here. As we see, confluence should be based on what you have seen in the market, and not what you think the market. So our confluence, we see that the weekly time frame is it is bearish. There are two reasons to tell us this market is bearish. Number one, we have we have a bearish break of structure or change of character. We have seen the bearish change of character, as well as we have already seen structure, bearish here from the chart. The market was giving us bearish structures. Here we have lower low, lower high, low high, lower low, lower high. So then boom, we have a continuation to the downward. So this is another confirmation that we are bearish in the weekly time frame. So then I went to the lower time frame. The other lower time frame was daily time frame, you see. So when I was in the daily time frame, first of all, when I was analyzing this market, it was around here, if I'm not mistaken. Yeah, the price was around here. So what I observed here, when I got into the daily chart, first of all, I had a confirmation of the daily structure that it was bearish, whereby we had high low, high low, high, then high low low. Remember, if you can review my podcast videos last week, we had taken this, we were managed to take this entry. We took this entry. It was a sell trade where we took last week, and we closed it with 240 pips, if you can recall very well. So I wasn't doubting anything that we were also daily bearish. As we can see here, we have had a break of structure, around here. So while here I was in the daily time frame, I will probably mark the highs and lows of the daily time frame, whereby here on the top we had high, and here in the bottom, you know, when we mark these zones, we are normally using the body, but however sometimes we can even use the wicks depending on how the structures are. We don't cream. So this is a daily low. Okay. So after realizing this, that I knew that within this week our trade will have been traded around this zone, with either we buy, we break the above structure, the high highs, and then if that will have happened, we will no longer be continuing with our bearish scenario. But if we break under, we know that we have a bearish continuation. And however, if I take a sell trade, if I want to swing it for too long, I will have exit my trade here. But let us see how things went on our side. Okay, so when I then shifted to 4-hour time frame, but when I was shifting to 4-hour time frame, remember, things were just like this. It was a very simple trade, because I was observing, since I took this sell trade here on the last Friday, so I knew my trade is bearish. So I was only a little observing this trend. Where would this 4-hour bullish trend ended? We have had the order flow, which we had high and high low, high low, high low, high, then boom, we had this break of structure with a very impulsive nature here. This was a change of character. This is a 4-hour change of character, whereby the market was no longer bullish, but it was bearish, because this 4-hour candle closed below the demand zone. So I was literally very conservative at looking at the features which were found around this break of structures. You know, when we break the structure with a higher momentum candlestick, we normally expect to have a retracement back around this area. So the number one thing I was looking at for 4 hour is whether this area had the features of demand and the supply. This was a very important thing that I'm looking at before I take a trade. And remember, you guys, we are back testing this trade which I took. This is USDJPY. It is just recent. I just closed this trade very recently. Just come out of this trade with a high head of course 3 entries. The first and the second entry was taken from the same spot with 203 pips. In the second entry, I took it today at 1 hour liquidities with 128 pips. So let's get back to the chart. So whenever I found a break of structure like this, I literally found get back to see whether this area where we broke the structure has any historical features of support and the resistance. So as you can see, historically here, this price offered as a support to support, quick rejection, you have impulse blackout, and so on and so on. But what about listening? What about listened? As we can see here, listened also this area had these features of support and the resistance on 4 hour, because here we have an impulse break, we have weak rejection, we have consolidation, we have an impulse break, we have an impulse break, we have resistance, we have support. So I was not doubting that this area would probably give me the opportunity to take my sell trade. And remember, when I was making this analysis, let us get back to see at my Instagram page at GatosFX. This is where we were in the 4 hour time frame. As you can see, the breakable structure occurred here with an impulsive nature, and then I marked this area as a support and resistance zone. So I was expecting the price to pull back, to have a retracement to the zone of support and resistance, so that we can have a continuation to go further and continue with being bearish. So when we get back the chart, this is the area which I'm talking about. When the price broke this area, my chart was around this area, I think, around these areas. So I was expecting to get a push up. You know, price does not move straight, it moves in a wave. Price always moves in a wave. So when it's making an impulse and then correction, impulse correction, impulse correction, impulse correction. So if you want to maximize your profit, when you are bearish, you have to sell at a premium price, and when you are bullish, you have to buy at a discount price. So this is what I was expecting. I didn't want to jump in the market and get stopped out. So I was waiting for the price to pull back. So my first entry was very simple entry. I took it. I actually took it at the lower line of the upper zone, because when I measured the number of pips for my zone, it was all about 34 pips to 30 pips. However, I went to the lower time frame to find out if there is any liquidity which I can find around this area. But as you can see here, we only have this impulse breakout. There's no any structures around this area. This is 1 hour, and you know, as a swing trader, I normally don't go to lower than 1 hour, 30 minutes. Very rarely I go to 30 minutes, but I found out there was no any other liquidity found, and the number of pips basing on my 4 hour support and resistance zone, it was literally about 30 to 34 pips. It was okay with me. You know, stop loss should not be based on agreed number of pips. Always stop loss should be based on what? On structure. So this area is where I took my first trade. I placed my sell trade on the lower line of the support and the resistance zone. This is where I took my first trade here. And my exit point was this point, lows of the lower low of the daily. Yeah, this was my planned exit point, where I closed this trade with 203 pips. So Price, of course, was on my favor. Price was on my favor, as we can see if we backtest here. This was the first trade when I was analyzing this market. It was here, and then the price jumped up to my my support zone, my resistance zone. Price went down again. It came back to take a secondary test, and here, of course, I was shaking a little bit, saying, "Oh, wow, the price is coming back." I was thinking of being stopped out, but price did not stop me out. Of course, price came again. So when price came again into my zone, I saw it as an opportunity to add another trade. I added another trade when the price came into this zone. I was near being stopped out, but I wasn't stopped out. So this is what happened. Okay, so this is how the first and the second trade was formed. The second trade was easy when price was coming back to my zone because I knew this price was bearish based on the higher time frame order flow. So when the price came back into my resistance zone with other features being supported here, I added another sell trade. But let's just go and see how I added this. The third zone, of course, the third entry. I took it from 1 hour. From 1 hour. What did I see? Let's go to the chart and see what were the confluences made me to add another trade. Remember, when I was taking this 1 hour, here, I saved the photo, USDJPY. Where is it? It is shooted somewhere. I think I took the photo of before. Yeah. Yep. So I was around this area. This was the photo I was taken before I took my trade. And I, of course, actually, I entered this in the market execution. So let's go to the chart and see. Things were like this. So this price, when I found out it was here, it was around this area. I was looking at this nature of the break of structure. 1 hour. I found out that the price shifted here, you know. In 1 hour, price was making a bullish retracement. Price making her highs and her lows. Her highs are lows. Her highs are lows. Her highs are lows. Her highs are lows. Her highs, and then boom, we had lower low. So when we had a low, I observed the nature of the break. The nature of the break was very aggressive. We had an impulsive nature of the break. So I was able to spot this. I call them weak rejection liquidity, and I said, okay, if this is the case, I'm expecting a retracement up to this area, and it was good enough when this price was making this retracement. I was on the market, so I took a market. I entered this trade with a market execution because if I would have taken a limit order, the chances of being liquidated were very minimum. I would have been left out with the spread. You see here is almost about zero spread. So I spotted the area, but I entered this market on market execution. So here is where I took mine. But not only weak rejection liquidity was the reason for me to take my trade, but also this area had some features of support and the resistance. As you can literally see here, we have this support, we have the resistance, we have impulse black, we have weak rejection, we have consolidation, we have resistance, support. So there were so many features which were telling me that this zone is good for me to take my sell trade or my second sell trade. So here is where I placed my second sell trade. Around here. The drawdown was very minimum, about 25 pips up to this area. So the price also the price played in our favor. Price went in our favor. As you can get back to my Instagram page, you see Here's where I took my second entry. From the diagram, here is where I spotted this with rejection liquidity around the support and resistance zone. So when price approached this area, because I was on the market, so I took a market execution sell trade, and see, here we are. Price boom, went all the way down as we expected. So this is how I framed this trade, USDJPY, and I closed the business. I closed with the business. My take profit was around the daily low on the body open and candle closure of the daily low. Since the price, of course, may still continue to go further lower, so I'll wait for a certain another push up, because if this daily candle of today closes below, this week's, because it will be a very good confirmation that we are still in the bullish continuation, then I will look for another opportunity to take my sell trade to go down, because once I look at the weekly and the monthly, literally monthly time frame, I can see that this price is coming. It's coming this down. This price is still coming this down. It's coming here. The weekly time frame, maybe we can, yeah. This price is coming this down. So if today's it doesn't manage to come all of the way to this point, then literally I will look for another retracement and get back into the business. So you guys make sure you follow me on my Instagram page, Gatos FX. If you want to learn trading my strategy, zone to zone strategy, DM me directly or WhatsApp me via my WhatsApp number 0621 022 or DM me on my Instagram page, Gatos FX, so that we can have further communication and further training. See you next time when we meet again and further discuss about these markets. Thank you.